There are plethora of funds available in the market to invest your hard-earned money, but like one size shoes cannot fit all. One style of mutual fund will not meet your return expectation and everyone's risk-taking ability. So now the big question is, how do you assess which is the right fund in your portfolio? And to help you navigate through this maze, we have on board Mrin Agrawal, founder, director of FinSafe. Mrin, good evening, welcome to the show. And let's directly hop into our caller queries. We have Ritesh's question for you first. And he's currently investing around 10,000 a month in equity mutual funds. And the funds that I'm talking about are PGI Mid Cap Fund, Axis Blue Chip, SBI Magnum Mid Cap. And he says that he wants to have a corpus of 12 lakhs in the next 7 years to pay his education loan. And in the last 5 years, he has collected almost 5 lakh. So now, based on these funds and the kind of investments he's doing, should he be satisfied with this and relieved about the fact that he will be able to, accumulate the corpus that he's aiming for through this portfolio?
All right. So good evening, Kavita, and it's lovely to be here today. So first and foremost, what I would say is that, of course, he wants a corpus of 12 lakhs in the next 7 years. And of course, taking into account inflation, because we cannot forget inflation, right? So taking into account inflation, the amount that he needs to be investing the amount that he needs to collect at the end of 7 years is going to grow to about 17 lakhs, right? So excuse me, assuming that he's already invested the 5 lakhs in these funds itself, the good news is that he has to invest only about 8,000 rupees a month. Of course, if this 5 lakhs is invested somewhere else at some other return, then the numbers are going to be different. But I have presumed that he has invested this 5 lakhs in these funds. So the good news is that he's putting the right amount of money. Now, in terms of the funds, so again, it's good to see that he's taking a good amount of risk in his investments as well. I think he's split it like more on the mid cap side than on the large cap side. Just that the two mid cap funds right now are underperforming a bit, but then as you know, most funds go through cycles, and I think on a very short term performance basis, I wouldn't want to say that exit the funds. What I would say is that keep a track of these fund performance, see what is the relative performance compared to the mid cap 150 index, compared to the category average. And then if you're seeing consistent underperformance, you might need to change. So right now, I would not advise him to change it, because also we don't know for how long he's been investing these monies. Right now, hold on and watch and keep a watch on them. But, nothing much to be done at present.
Right, so that was the solution for Ritesh. We move on, and we have a query from a 20-year-old, and that's Shikha. She says that she's a freelancer and she's a digital content creator, and she wants to invest in her gigs money, and she wants to invest her gigs money in mutual funds to pursue a degree abroad and obviously upskill herself. So she wants to have a corpus of 20 lakh in 5 to 10 years, and she wants you to suggest mutual funds and the amount she needs to invest for it. So first up, it's very nice to know someone who's 20-year-old wants to invest, and the gig money that she's earning, she wants to invest it for her upskilling and for her further education. So that's a goal attached to it. There's no clarity on the time horizon though so far. But then what should be her approach?
Yeah, so again, I think it's really nice to see that at 20, first of all, she's working, and secondly, that she's trying to save as well to pursue higher education. So that's really, really good to see. I think in terms of the funds, because she says that she wants to have a corpus of 20 lakhs in 5 to 10 years. I think in terms of the funds, it really depends on her period. Now, you see, 5 to 10 years is a very long-term period, a very long range, right? So, in the 5-year range, we typically recommend a balanced fund. Whereas if you're going up to the 10-year range, of course, I would recommend an equity fund. So depending on the exact time period, one of the things could be to also split up the funds to look at a combination of the balanced advantage funds and look at a combination of a mid cap and flexi cap fund. Now, since she's young right now and she can take some amount of risk, if she doesn't want to take risk at all, of course, she can do index and flexi cap. But if she can take some amount of risk, I would highly recommend her to do some mid caps and small cap funds. And at one side, do some amount in the balanced advantage fund as well.
All right, we move on. And our next question is from Santosh, and he says that he's investing 10,000 per month in equity mutual funds to secure his daughter's education goal, and the time frame that he's looking at is 10 to 12 years for the investment, and he will need at least 15 to 20 lakhs for her education. The funds that he's invested in are Nippon Small Cap Fund, SBI Small Cap, HDFC Mid Cap Opportunities, PGM Mid Cap Fund, and he wants to know if these funds are right for the goal that he's just given up.
So again, keeping in mind a period of about 10 years, he needs to be investing anywhere between 11,000 and 16,000 rupees per month in order to reach this particular goal of 15 to 20 lakhs equivalent 10 to 12 years down the line. So that's point number one. It's good that he's investing 10,000. And what I would say is that slowly try to increase this amount to a higher amount so that you can actually reach your goal. As far as the funds are concerned, again, it's good that he's taking a good amount of risk because 10 to 12 years is a good long-term period to take risk in mid caps and small caps. The thing that's very important, of course, is to remain invested. So you were having this previous conversation with Arun about this as well. And what is very important is not to get perturbed by the volatility, to remain invested in these particular funds. The small cap funds that he's chosen are absolutely fine. Again, on the mid cap fund, we are seeing a fair bit of underperformance compared to the index, which I take as mid cap 150 index. We are seeing some underperformance on these particular funds, but I would think on a longer period of time, things should get ironed out. But at the same time, I would say keep a watch on the funds. But more importantly is that, if you do see volatile times ahead of us, do not exit the funds, remain invested.
Do you want to recommend him Sukanya Samriddhi?
Yeah, he not really, because in Sukanya Samriddhi, what happens is that we don't know what's the age of the child, and with Sukanya Samriddhi, at the age of 18, you can only withdraw 50% of the accumulated corpus. So I would say that, if you have a 10 to 12 year time frame and you can take risk, then I would certainly say go in for mutual funds.
But then when we're also talking about a goal which is an education goal, and we have to factor in the education inflation that's higher than the normal food inflation that we look at, okay? So how important it is for Santosh to reassess his goal and maybe just rework on the amount of corpus that he wants to collect?
I think the corpus is fine. Like if you look at today's education cost, I mean, I think 15 to 20 lakhs is fine. But
we still don't know whether the kid needs to go abroad or it's an education
yes.
that's in India. So how do we tackle that goal alignment?
So unfortunately, what happens is that knowledge you get only when the child is in high school. So one
Right.
option is that you see the trend that's happening around you, and you try to then kind of increase the corpus. So if you're looking at 20 lakhs, then certainly you're going to need much more than 20 lakhs, right? You're going to probably need 4 or 5 times the amount. So look at increasing your corpus goal value and look at obviously saving more. That's the only thing that you can really do.
Okay, let's move on to our next query, which is from Siddharth. He's 30 years old and he works at a private company. His monthly income is around 80K, and he wants to invest in equity mutual funds for a period of 20 years and build a corpus of 1 crore. And he says that he can right now invest around 30 to 40,000 per month, and he wants to do it through mutual funds. So what funds would you recommend?
Yeah, so I think the amount that he's investing is good. It's good to see 50% of savings. That's a really good number to see going towards investments. And again, since he's young and he has 20 years to go for his particular goal, certainly I would again say go in for a combination of small caps, in fact, small caps and mid caps. And of course, if he doesn't want to take that much of risk, he can look at the flexi cap funds as well. And again, if he doesn't want to take any, I mean, he wants to take really low risk, but be in equities, then clearly go in for the Nifty 50 index fund. A nice combination could be like a Nifty 50 index fund, a flexi cap fund, and maybe a couple of small cap funds.
All right, so that's a strategy for Siddharth, and as you rightly mentioned, he's investing a good amount right now. So, any luck for him to accumulate the amount that he's mentioned before the time frame, if he increases the investment?
Oh yes, absolutely. Because even now, I when I took the returns at 10% only, by the way, and the amount that he had to invest was 35,000 per month. I do believe that in a 20-year period, he should be able to earn more than 10% return. But you always want to be very conservative with your calculations, right? So certainly, if he does get a higher return, that's an added bonus to him.
All right, Mrin, thank you so much for being a part of this show and helping our viewers with their financial portfolio.